if you watched either one of my last two videos or both of them, then you're definitely going to want to watch at least the first 5 minutes of this video, because I'm going to be talking to all the investors, all the people out there that are by a chance watching this video, and I'm going to be sharing what kinds of investors are going to benefit from watching the entirety of this video, because I know time is precious. Time is a precious commodity too. So I want to make sure that I'm not taking anyone else's time that's not really going to benefit from watching this video all the way through, because this is going to be very thorough. So let's get a recap. What's happened since my last video just a week ago? Well, something crazy has happened. Since my first video on Bitcoin, the price of Bitcoin has doubled. So that's pretty wild. Right now, Bitcoin, I think, is around 40,000. We'll check out the charts in a little bit, but price has gone crazy. And since my last video, the price of Bitcoin's gone up almost 35%. It's gone up another $10,000 since my last video. And so you can tell a lot of things are changing right now. A lot of things are happening. And so it's really difficult to do technical analysis on the run. And so I'm going to be sharing what I got right, what I got wrong, and what kinds of investors and people is this message going to be really important to. So let me go ahead and make sure I'm covering everything. So the things that we're going to talk about in this video, first of all, there are three kinds of investors when it comes to Bitcoin. And I'm going to be sharing my opinions if I'm talking to these kinds of people, just in theory. Again, of course, no financial advice, all that, yada, yada, yada. But I'm going to share my thoughts, and it'll make more sense when I get into it. Second of all, I'm going to be getting into a question that I got on my last video. So this was an awesome question. I really appreciate it. Right here, we're going to be getting into depth as to my response on this and what I got right and wrong, and why this is a really interesting situation. And there's starting to become a lot of clarity as to what's going to happen looking at the next 6 months to years. So I'm going, well, a year is a little bit long, but I'll talk more about that in a little bit. So next thing I'm going to be talking about. So I'm going to be talking about the fundamentals, the technicals, what I got right, what I got wrong. Fundamentals, I'm on the ball. Technicals, not so much. So we're going to get deeper into that. And then I'll dive into my whole outlook for Bitcoin really in the next 4 to 7 months. I'm going to get into that. But I'm going to be sharing my entire trading plan, or lack thereof. I'm going to be explaining it all, being as transparent as I can. As we're getting so much new information, it's really important that, especially traders, and I'm going to get in that in a minute, we're constantly looking at different perspectives, looking at different possibilities, and willing to change our analysis when we're proven wrong. So anyways, if any of that sounds good, and if you watch those last two videos, definitely stay tuned for the first segment of this video. Let's get right into it. So first off, and most importantly, I want to update everyone and really give a kind of clear message to a lot of different people that might be in different situations. And so the general thing, first off, is that fundamentally, I'm still bearish on Bitcoin for the next indefinite amount of time. It's a very, very risky play right now. Now, considering everything that's happened in the last couple of weeks, my technical outlook for price not going, continuing this kind of bear market trend where this was like this kind of false breakout, that's basically invalidated. And I'm going to dive really deep into this video later on. But again, that's not the point. I want to make sure this first part is for everyone. So first off, three different kinds of people. I think everyone kind of falls into one of these categories. And technically there's a fourth person. That fourth kind of person is a person that doesn't care about Bitcoin, not interested in investing in it, just not their thing. Awesome. You know, you're probably all watching this video, so I wasn't really going to try to cover every single person. But first off, the first person that I want to address is the person that is new to trading, new to investing, new to all of this, and could possibly get swept into the greed that is about to come into play in the next 6 months. Now I'm going to talk about this later in this video, but this is not for everyone. My technical outlook is that there is some very there's a possibility for a very large move in Bitcoin in the next 6 months, but it's a trading opportunity. It's not an investing opportunity. So anyways, to this first person that is new to investing, new to trading, new to all this kind of stuff, I don't necessarily recommend at this if you're not extremely experienced and are willing to take on a lot of risk. That's a huge part of it, risk management, and really whatever you're doing right now, really just about any market, you've got to be cognizant of the real risk that you have, because there's a massive amount, and a lot of people I don't think really understand how much risk there is. So far, given everything that's happening, I'm thinking it's looking like it's not over yet. So this kind of speculative bubble is continuing. But anyways, that's my advice to the new investor, the new trader, whatever it is. What I'm going to be talking about in this video is kind of advanced, but I'm going to try to explain it to and explain a lot of what I'm doing to a person that would be able to kind of start learning it, because I don't want to just kind of rant and make a video that's not really going to be usable to a lot of people, because I use a framework that a lot of people don't use, and so it's kind of esoteric and difficult to jump on if I'm not kind of explaining things as I go. Anyways, the second person that I want to address is the long-term investor, conservative, and is just not willing to take on a lot of risk, but is considering Bitcoin because of all the mainstream and institutional acceptance that we've seen in the last several months. And we'll probably continue to see this as prices go up in this very, very volatile asset. To that person, I would say, I completely understand if you're going to do that. Again, none of this is investment advice or anything like that. But if you're going to do it, just make sure that it's money that you can lose basically all of it. Because in my perspective, I look at investing and trading in two totally different categories. I look at investing from the perspective of, hey, I'm going to buy something that has real value. And here's the kicker, where I'm not going to be I don't have this like real close target. I'm not going to be trying to trade it for a higher price in the next year, 2 years. Like it's a long-term investment. It's something that holds value over time and continues to go up, where you don't have to look at it every day or even every week or every month. Your kind of traditional 401k kind of thing. That's kind of the idea. And a lot of people think that the stock market doesn't have that kind of risk. It does. But again, all these bubbles look like they're still intact, and I'm following this very closely on my Instagram page. And yeah, I'm looking at it very closely. So far, my kind of outlook is that this kind of craziness could continue between the next 4 to 8 months. That's kind of my window for when I start seeing these bubbles really not being able to go any higher. Again, things can change as new information is gotten, but that's kind of where I'm at right now. And I feel like I'm getting a lot more clarity. And that's why I'm wanting to make this real deep dive video. So to that second person, I don't see, and now trading, I kind of went on a tangent. Okay, trading is different because you're looking to buy something and sell it at a time that's near in the future. And that takes a lot of risk management. It takes a lot of setups and technical analysis, because again, it's not that you're investing in something because it has value. You're only buying into it because you think you can sell it at a higher price. And that's where we're at in Bitcoin. And so what I'm going to be talking about in this video is talking about the trading opportunity that I'm looking at. And I'm going to get real deep into it. I'm not looking to buy right away. I'm still kind of feeling it, but this is the target that I see going, between the next 4 or 8 months. And I see this being a massive bubble, and then popping. And so I want to make sure that people that don't get swept into it not knowing what they might be getting into and considering it some kind of this kind of new long-term investment where they put a substantial amount of their money and they act like it's not there and hope it's this high yielding savings account. And then when the bubble pops, it's going to be really, really ugly. So that's that. And then to my third person, the person that's done a lot of trading, knows risk management pretty well, very well, hopefully, and is comfortable taking a lot of risk and experiencing volatility, and has been doing this for a while, or at least is experienced with it. This is where my technical outlook that's changed. To me, it's creating an opportunity, but to most, I don't think it's a good opportunity and could actually, turn out pretty bad if you don't know what you're doing, or if you take on too much risk, or, something like that. So this video, the rest of it, when I start going pretty deeply into everything, it's mostly for that experienced investor, experienced trader, that specifically trader. Yeah, you can be a good investor too, but again, this is going to be a wild ride in my opinion. And I'm going to be following the short-term updates, on my Instagram channel. So I'm not going to be zooming in too much. I'm just going to be explaining why I was wrong in this video as far as my previous technical outlook, why I'm still fundamentally bearish on Bitcoin, but I have now, I see now upside in the near term as far as price. Again, price doesn't follow fundamentals necessarily. Just look at the stock market. I'm going to talk about that in a little bit. So anyways, yeah, that's what I wanted to share with everyone as far as, whoever you are, whatever your values are, wherever your wheelhouse is, I wanted to make sure that this is the information that you get. And then this is going to be turning into more of the deep dive, and it's going to be pretty thorough, and it might be a little ranty. So, I think there's a lot of good information in here, and analysis that I'm going to share, but it's going to be a lot. And but hopefully, if you're really interested in this and really interested in the trading opportunity and want to see my perspective, by the end of this video, you'll have a really good idea of that. So anyways, now I'm going to cover this question that I got on my last video, asking basically, how do we know when the right time comes for an investment opportunity, let's say in Bitcoin? That's basically the question. And it's really tough. And, I'm not going to say that I know the best time. And in the next 5 years, hopefully there will be a really great investment opportunity. I'm pro Bitcoin. I hope there is, that Bitcoin survives and there becomes a really great investment opportunity. It'll be a very extremely high reward, obviously high risk, because the risk is always that Bitcoin goes to zero. But yeah, I'm super pro Bitcoin long term. It's just I don't see it as a good investment. And the question is, how do we know when the right time is? Well, it's really more about how do we know when the right time is for possible sustained growth. Right now, the charts are telling me something that I'm going to get into in this video. I'm going to really cover it all. So I'm assuming, since you had this question, that you are pretty interested in Bitcoin and its possibility, maybe not only in the next 6 months or year, but also further down the road, and when would be a good time to buy it from an investment standpoint, rather than just from a trading standpoint. So I'm going to kind of share that, and I hope it makes sense. If you have any question, if this video doesn't cover everything, or if it doesn't really answer your question, then just let me know. But the gist of it is understanding when to act, and a big part of it is just waiting, being patient, and knowing what you're looking for. And when I'm saying what you're looking for, I'm not talking about the investment. Well, we're talking about Bitcoin. When is the right time to buy Bitcoin? Knowing from a market standpoint, from a technical analysis standpoint, when is the right time to buy? What are we looking for? Where are we looking for price to come? Rough guess of when. Right now, we're in a speculative mania all around us. And from the technical standpoint that I'm going to trace and really try to kind of make it come to life so that you understand how my analysis connects to the possibilities of Bitcoin in the next 6 months and also in the next 5 years. I hope it starts to show that sometimes we miss investment opportunities, and the time when it becomes clear, sometimes it's too late. And so it's not necessarily the best thing to just jump into it and ride it and then ride it all the way back down. And it's a tough market. So to me, from an investment standpoint, I think Bitcoin's going to be crashing in the next several years. I think the next 6 months have a lot of upside from a trading standpoint. And so that's the best I've got. I'm not I don't have a crystal ball. That's just what my analysis is telling me as I'm getting new information. And a lot's changed just in the last 2 weeks since I started doing these Bitcoin YouTube videos. Bitcoin's really torn apart the scenario that I had as the most favorable scenario. So it's kind of funny timing. But anyways, that was a great question. I really appreciate it. And I hope you enjoy this video and find some value in it. And I'm going to be now getting into the technicals and the fundamentals. Right now, the stock market is defying the fundamentals. And that can happen a lot of times. A lot of times price movements don't make sense when you look at the fundamentals, or you look at the sentiment in the market, or you look at GDP. You're having a massive, you're having this global economic contraction, and things are still really not where they were before the pandemic began. And you're seeing prices in assets just going through the roof, as if we're having this kind of reflationary, like massive growth, and everyone's thinking that this is going to continue going up. Now, I'm not saying that everyone is, but at least asset prices are continuing to go up. And recently, if you're following me on my Instagram channel, the stock market, the S&P 500, which is a good proxy for the stock market, just broke out. And I think the Dow, the Nasdaq did too, but I focus specifically on the S&P 500 because there are subtle differences with all of them. They don't track always the same. So I've really focused on the S&P 500. That's what I mainly trade. The S&P 500 has been in this kind of wedge for the last 2 months. It's been just a really strange pattern. It's been very difficult to trade the short-term swings of it, in my opinion, because it was weird. It was an ascending triangle. It looked like possibly an ending diagonal kind of pattern. And I ended up changing my opinion as we started breaking to the top side compared to the downside. And it looks like an ascending bullish triangle, or was it ascending bullish? I have it on the Instagram channel, but I've been taking in a lot of information, so I can't even think of the exact pattern of what it was called. But it's an ascending converging pattern where if it breaks to the top side and tests, that's really important because it could be a false breakout and tests, that's a really bullish sign and could trigger a larger move. And given the magnitude of this kind of pattern, how long it took, this move going up could last for a pretty decent time. And it's starting to create a lot more clarity. Markets are starting to move more in sync. And I think we're heading into the last part of a massive speculative bubble. So now when we're talking about Bitcoin, you don't want to be just saying, okay, the stock market's going up, so Bitcoin's going to go up. Well, in my opinion, I think Bitcoin's going to be going up a lot more than the stock market. And that's probably, obvious. Bitcoin has been going crazy and obviously has higher potential, but also higher risk. Funny enough, long term, both have massive risk. You think that the stock market doesn't have as much risk as it does, but it actually has tremendous amount of risk. And I'm going to get into that in future videos. But again, I'm following the market really closely on my Instagram channel. So if you're looking for short-term updates as I'm trying to figure out where we are in the trend and looking at the bigger picture, not bigger picture, smaller picture, as we're tracing out the final segments of this bull market, which I think could very well last into the middle of 2021, which was unlikely. But as you're getting new information, you have to change your outlook in the short term when you're a trader. So again, fundamentals can defy technicals for a long time. Technicals, and well, let's just say technicals. Technicals are just looking at what is human behavior doing, looking at the charts and just kind of letting the charts kind of tell you the story. And human emotion is oftentimes extremely irrational. I don't think you'd see, the biggest, you wouldn't think that you'd have the biggest GDP drop since the Great Depression. And as a result, the market would be spiking upwards in, strong fashion, not just, a fluke, but for, we're going on a year of where we're continuing this move up. And I think we probably will have a over year-long market moving up. It'll be close. We'll see. I'm going to be tracking it really closely on that channel. But this is crazy. We're living in crazy, wild times, and you're seeing that through asset prices. Now, is there any fundamental reason for why asset prices are doing what they're doing? No. And so that's where human emotion and the price charts can sometimes help you see where prices are going, even irrespective of the fundamentals. So getting back into this question, for me, fundamentals are bearish looking at Bitcoin in the next couple of years. I think deflation is coming. I think there's a dollar shortage, and that's going to put a squeeze on asset prices when an insolvency crisis comes, because it's really, the debt is going to squeeze the economy. And if the debt is not able to be expanded, then it's going to result in a crash. And so that, I'm going to get a lot deeper into that in separate videos, but I really want to focus on Bitcoin and how this plays, now get a little bit more into this question. So let's break this down. So the incoming bear market, well, I'm going to explain what my previous count was and why I'm changing it. And I'm going to share all of that. And then this last part, how do we really know when the right time is? You're not always going to know when the right time is, but I think there's going to be a lot more clarity because we're towards the end of this massive bull market. So this is what I'm going to do. I'm going to share this chart right here, and I'm going to answer that question, kind of, how can we know where we are in the trend? Well, there's a framework that I use that's called Elliott wave theory. And so this is just a schematic. This is just a general, roadmap. It's not an exact science or anything. This is just looking at a schematic of the market. So we have this big bull market, and I just want to make sure that everyone can see that. We have this, the wave count in black represents a bull market, or a market that's going in the larger trend, which is usually up. Hopefully you want to be buying something that has a history of at least going up in price, because eventually that would be going to zero. But anyways, you have a market that's going up in price, and then you have a market going down in price. This is the bull market, the bear market. Usually a bull market consists of 5 waves. You have 3 waves going in the same direction, 1, 3, and 5. And then you have 2 waves going in the opposite direction, wave 4 and wave 2. So that's just kind of a sense. Again, this is not an exact science, but if you understand what's happened before and understand the price history, then you can understand where you are in any trend. And Elliott wave can get very complicated because it has a fractal nature to it, which just means that you can look at Elliott wave theory from a super zoomed out chart and look at the bigger trend, or you can try to zoom in and see exactly where you are in a trend. I prefer zooming out, and there are 2 reasons for that. First of all, getting the long-term count is so important, and not always an easy task when there's a lot of price history, or there's a volatile asset or whatever. It takes some work. So you first have to understand where you are in the big picture before you can even start to speculate where you are in the small picture. Because if you don't know where you are on the big picture, there's no way for you to have any relative sense of where you are in the trend. And so that's really, really important. So what I do is I zoom out as far as you can go. This is called top-down analysis, and just zooming out as far as you can go and trying to understand where we are in the trend. So I'm going to share where I was wrong. Before my last video, I was talking about how I thought we were going up right here. Now you might be saying, well, Bitcoin was already above its all-time high. So why would that make sense? Why would that even be a possible scenario? Well, there are technically two scenarios. I'm going to go with the one that I thought was most likely. I thought we had already finished 5 waves. So again, I'm going to put this on, and I'm going to cite that chart so you can kind of follow my logic and why I'm changing my opinion. And so here, this was my previous count where we had 5 waves up since 2010. Right here, wave 1, wave 2, wave 3, wave 4, I think bottomed right there with a double zigzag, and then a wave 5. That was my count. So now what's happening, what I thought was happening was now that we're going in the correction where we had the correction back in July, let's see, that was back in 2017. And that was wave A of the bear market. We were going up in wave B of the bear market. You can go, and then I was expecting us to go in wave C of the bear market. There was a scenario where this would be a running flat where we'd only go back down to maybe, I don't know, 12,000, 10,000, but there's also a scenario that we could go much deeper. And again, my bias is that there's going to be a crazy amount of volatility in all asset markets. And I think most of them will crash. And so that's my long-term picture. That's looking at the next, I'm thinking now markets will probably continue up for the next, 4 or 5 months. Again, it's hard. Time is really hard, but I'm starting to understand where we are in the count. And because if you know where you're not, then you can start really, really narrowing down the possibilities. So anyways, again, this is a pattern. This is a kind of pattern. There are different kinds of bear market patterns in Elliott wave theory. Again, it's complicated. Elliott wave theory is not the only tool that I use. There's a lot of complexity to it, but it's very, very helpful. And it's a pretty phenomenal tool when you really start to understand it. But there is a pattern in Elliott wave where the wave B goes above the previous wave A. And that's a very common pattern. But it's not playing out. I'm going to share why it's not playing out, and basically why price would have to top out right here and then just go straight down. And I'm going to share why that's also basically out of the question. I mean, I would say it's at this point like a 2% chance. So, I'm always looking for that other possibility, but at this point, it looks like it's very, very unlikely that I was right. And when Bitcoin's moving so quickly, well, it's really tough to adjust your analysis and then make a video, because I was really looking at that count and at the other count didn't make a lot of sense. And, I had to zoom in and really try to figure it out and break it down. So let's see here. So what I'm going to be sharing, so I'm going to go back to the schematic just to say what I just said, but put it in the schematic terms, which is a little bit more simple so that we can kind of make sense of it. I was over here. I thought we were already in a long bear market that started back in 2017. That was my preferred count because it already looked like we had 5 waves. And so I was thinking that we had the wave A, this wave B was going to form more of like a bear bull trap. And then we were going to have the big wave C. Again, potential scenario that we'd have a wave C that would only go that low. And then we start going up. But that brings in the other scenario of whether or not, if it was like this, whether or not this would just be wave 4. This would be wave 4, and then we still have wave 5 to go, which would mean, so again, complex. But the fact that this count now is becoming completely invalid, which I'm going to break down in a minute, it starts to make it very clear where we are going to be going, the larger trend in the next 6 months. Now, there are going to be massive corrections. There's going to be one correction that's much larger. I'm going to explain that too. So I'm just wanting to make sure that we're on the same page. So now, given that this is invalid, that we're not in a bear market, we're in the late stages of a bull market, of a long-term bull market that started back in 2009. This is the best count. Again, not 100%. This is a theory, but it gives you a really good idea of the possibilities and the probability that you're in something, and it can really give you at least a sense where you are generally in the trend. And so I'm very, very confident that this is where it's heading, and I'm going to be following it very closely if there are any updates. Now, again, I'm going to be sharing my trading plan based off all this analysis that I'm going to be diving into in this video, which I'm going to get to. But again, this is really make sure that you're ready for this, because it's going to be a wild bull market, especially if you've never traded this. I didn't trade it. I wasn't trading back in 2016 and 17. I was more looking at the long-term investment standpoint and starting to understand market structures, but I was not actually going in and trading things. So this is going to be my first Bitcoin market that I'm going to be following very closely in the bull market phase. Now, we had this move back in July of 2019, but again, that was just a smaller correction within a larger move up. We're going to get into that too. So where we actually are, and I'm going to talk about that, is we're in the wave 5. We're around this part of the trend. So that means we have a little bit more to go. Now, something cool about wave 5s in Bitcoin, historically, wave 5s, whether it's, it doesn't really matter the part of the trend, whether you're looking at a smaller chart or a larger time frame, but we've had some very, very clear bull markets where wave 5s have been the strongest with Bitcoin. I'm going to share that with you real quick. And that's why I'm looking at this as a very interesting trading opportunity, because we could have a very quick move to the upside in the next 6 months. It's going to be rocky. There are going to be some corrections. But this is, let me share so we can get a sense. This was the bull market back in 2017. Let's break down this wave 5. The final wave 5 right here, going into 2017, it's really clear. You can see it right here. We started at $1,800 in July of 2017. We went up in wave 1, wave 2, wave 3, wave 4, and then wave 5. So now this went all the way up. This move went up from $1,800 up to, again, $19,000. So that is a 972% increase. Now watch, so that's insane. That's the last move of the bull market. And again, this whole bull market didn't start until it started all the way back when we were at $160 in Bitcoin. So Bitcoin goes through these kinds of crazy phases in price. Again, very risky, but massive upside, massive downside. If you know where you are in the trend, you can really do it. You could obviously make a nice trade. So going into this part, now watch this. Now, if I zoom in, here's the 5th wave of the final 5th wave on a larger time frame. That went from $5,600 all the way up to $19,700. So almost a 400% increase just in the final smaller degree 5th wave. So I'm hoping that kind of makes sense. You can look at wave, you can continue to zoom in and see smaller waves, or you can zoom out, and those smaller waves make up bigger waves. So it can get very complex if you start trying to, zoom in to and try to, break everything down. You really just need to make sure that you have the larger count first before you try to start breaking everything down and zooming in. Because if you don't have the larger count right, then your zoomed in perspective is going to be off. So, and you can see that with this case, my count, long-term count was wrong. So I was able, from my standpoint, call this as a move going down, but I wasn't able to call this as a move going down or as a move going up, because I thought this was already the 5th wave. So this count is actually already corrected to what my new count is. So anyways, again, just another example for this 5th wave phenomenon. This is not the full chart, but here is another 5th wave. This is wild. So right here we have a wave 1. This is a wave 1. This is a wave 4. And look at this 5th wave. That is just ridiculous. This is the whole 5th wave. And that went from $62 all the way up to, I think, $1,100, over $1,100. So these wave 5s are really, really vicious. So now I'm going to get into why my count was wrong and what is the new count. So here's was my previous count. This is wrong. Now I'm going to share why this was wrong before I get into the new count, because it's really important not to just say, oh, price is going up too high, that means my count is invalid. Nope. that is not a good way to run your analysis. Basically, in the short term, if it doesn't work out, then everything's wrong. You got to know where you're wrong, and not abandon your position too early in the case that you're not wrong. So something that's this structure, I was thinking was going to take the form of ABC, and that would be the wave big B in the bear market. Now, when you're looking at this on a linear scale, you cannot interpret Bitcoin. You would have to say that this is the massive bull market, but this would not really be the case, potentially, because you can't interpret the rest of the picture, and you also can't determine the Fibonacci retracements on the scale that is really used for interpreting the large price fluctuations of Bitcoin. Because if you do a Fibonacci retracement, this is going massive amounts, above, compared to when we look at it on a logarithmic scale. We are not so far above the last bull market to make it out like it can't be any other kind of pattern. And so I was tracking this as a corrective pattern that would, bring in a bunch of people thinking it's the new bull market, and people be wrong, and this crash down. So I was really looking at that scenario because I thought that would be a really tricky scenario. And I thought that was what was playing out to sucker in more people. And, it looked like a very clean pattern. But the problem are two things. This is a wave C. Wave Cs are always 5 waves. Now, in either scenario where this is going up in a big wave 5, which is the count that I now think is most likely, in that case, this would be a wave 3. Wave 3s are 5 waves. So wave Cs and wave 3s are both 5 waves. So therefore, I was expecting this to shape out in 5 waves. I talked about in my last video, the 5 waves doesn't look like it's there. So it looks like we're probably going to continue going up in the short term. But I was kind of saying, this should be ending pretty soon if my count is valid. Well, I got information, less than a week later that, my information was, or my count was becoming invalid very quickly. The reason for this is because if you break this down, it doesn't even look like we've finished the 3rd wave of this 3rd wave. Again, we need 5 waves within this move. And again, I'm calling it a third wave prematurely, but you already know that this is not going to end up being a wave C. And another really important factor that I was looking at was that oftentimes expanded flats, wave A's compared to wave B's, usually wave B's, and I'm going to do this again just so we can kind of understand. I can show you why I'm fairly certain I'm wrong. Is that for comparing wave A to wave B, which is what I was looking for, the wave B should end up being around 138.2% retrace. Again, that's a very exact number, but around the 138% move of this wave. Now, if you say, well, Bitcoin is double above the previous all-time high, that's way above 138.2%. It was already above that last week. Well, and when you're looking again at Bitcoin, you have to change your Fibonacci retracements. You have to change all your analytics to accommodate that logarithmic scale, that kind of exponential chart, in order to make more sense of the long-term price movements in Bitcoin. You can interpret the short-term price movements of Bitcoin in a linear scale, but when we're looking at the long-term, the best way to really understand what's happening in the larger trend is by zooming out. So we're already at the 138% retracement. This is around $39,667. So given that we're going above that, is around $40,000. I think we've already broken above that. Let me see what the high was in the structure so far on this chart. On Bitstamp, it says the high was 42,000. Now, again, if this wave ended right now, I would say, okay, this is a very real possibility. It looks like we've already had 5 waves, and we're going to have to see if this ends up being the wave C, but there's going to be downside regardless. Because again, if wave 3 or wave C was ending, we had 5 waves, then we'd expect, if it's a wave 3, we'd expect a wave 4 and then a wave 5. If it was a wave B, my preferred count before, we would expect a wave C, which would take 5 waves instead of 3 waves, like a wave 4. I hope that made sense. If it didn't, I know this is really, really kind of hard to follow if you're not if you're not familiar with Elliott wave. But slow down that last part that I said just until it kind of makes sense. Again, understanding that it's all made up of 5 waves and 3 waves. Wave 4s are 3 waves. Wave what was the other scenario? Wave C's are 5 waves. So if this ended up being, if I was still not sure which one would play out, I would be saying, well, we need to look and see if this takes a 5-wave shape down. And we'd also know for sure if this was invalid, if we broke below this 13,900 level or 800 level, this part right here, because we know that wave 4 and an impulse cannot overlap this 13,000 figure. So that's going to be a really important figure, and that's going to come into later when I talk about the trading opportunity. Very risky again, but not for everyone, but it is an opportunity, and I'm going to be looking at it. Anyways, we are already at this 138.2% retracement, and this move right here is not, it doesn't look like it's had 5 waves. It looks like you can count it 2 different ways. You can count it as a 1 2 1 2, and we're still going up into 3, or you could count it as this is all wave 1, wave 2, and we're still going up in wave 3. So that means we haven't even started wave 4, at least unless we just started it. But again, we haven't confirmed the top, and we're still going to have a wave 4 and a wave 5. So this is going to go way above this, and at that point, it doesn't make sense. And so what I did was I zoomed out and I said, okay, well, what other count could this be? I talked about 2 other scenarios, and I talked about, well, these are the alternate scenarios. I don't agree with them, but again, I have to kind of consider other scenarios other than just my preferred one, which ended up being wrong. Again, I'm very, very certain that it's probably 98% that it's not going to be valid. So anyways, I'm going to go ahead and delete this fib retracement because we talked about that, and that helped me figure out where my analysis would be wrong. Now again, I hold a tiny amount of Bitcoin. I'm not trading it. It's not like I wasn't 100% sure. And so when I don't feel pretty really, really confident, I'm not going to put in all the energy to try to trade it. I had my preferred count, and my fundamentals also are very bearish on Bitcoin. And so I have a bearish bias long term, but price again can stay irrational for a long time. And human emotion, we have to understand that as traders, we have to discount the fundamentals and all the doom and gloom or the hysteria or the exuberance and all that. We have to trade off the chart primarily. And kind of understand big picture, but the charts oftentimes can kind of signal to you when big picture events are going to happen, or at least big events for the price of the underlying asset. So getting into the new wave count. Why is it the new wave count? This was scenario 1 that I talked about in my last video. This is the best count for Bitcoin now. And I would say that maybe it was all along. Maybe I was just missing something. I'm going to share what I was missing so that maybe my count you can kind of explain, understand why I have this count for so long, and why now I know that this is not the right long-term count. So anyways, this was my long-term count. Makes sense. It looks like, if you draw it, it looks nice and clean. Well, the problem is when you look at a logarithmic chart, you lose the sense of the relative moves up, because this doesn't even look that much. It doesn't look that. It looks kind of like a long meandering move where you have these tiny candles. It just kind of has this little spoon up kind of move. Whereas this looks crazy. This looks like it's a much bigger move, and this looks even bigger. Well, it's just steepness, and these moves happen faster than this one did. But again, this is a massive move. You lose the relative amount nominally, how large these moves are. So again, this went from $161 all the way up to $19,000 in this wave. So that's crazy. Now, what's the alternate scenario? I'm going to go ahead and draw it, and then I'm going to explain why I came to understand after really zooming in and breaking it down. I kind of found where, oops, I'm already drawing it the wrong way. Oh man, I'm so used to that. We need to change that. So anyways, this is the count where we have wave 1 here. But again, that's not the whole wave 1. Wave 2, wave 3, wave 4, wave 5. That's wave 1. Oops. And then we have the big, I'm going to go ahead and draw it because I slipped. I'm going to go ahead and delete that because that's wrong. And here we have wave 2. This happened and went from $1,100 down to, $151. Then we had the wave 3. This is the wave 3 that everyone remembers back in 2017, where Bitcoin finally went into the mainstream and it was wild. Then we had this wave 4 coming all the way back down from $20,000 down to $3,000. Now we're having the final move up. So before I get into the implications of this and where I see this pattern going, I first want to explain, well, did you just change the count and, just assume that it was that one? No, I really, really dove into this. And first of all, the other count, I think that was scenario 2, is where my count is valid. This is the whole wave 2. This right here, this is where it's going from 3 to 4. This is the whole wave 2, which means on our little handy dandy cheat sheet, this is where we would expect to be after that wave 4, which suggests that we're starting another like 10-year bull market in Bitcoin, which I am, I guess, 100% sure is not the case. And I have a lot of reasons for that, but I don't want to get so deep into this. I've already, kind of gone deep into this. Anyway, so I don't want to get into that all in this video. I'm going to be doing that over the next couple of weeks. I'm going to be trying to make a lot more videos that hopefully interest a lot of different people, not just about Bitcoin, but this is going to be an asset that I'm going to be looking at very closely. But anyways, that scenario is saying that Bitcoin, we just finished wave 1, we would be like right here in the trend. That's where it would suggest that Bitcoin's at, which means we're going to go in a wild wave 1. We're going to have a wave 2, but it's not going to be that bad. And then we're just going to go massively up. And really, when you're looking at this from relative terms, this wave 1 in Bitcoin would be like crazy if that's the case. And this is going to be going way above, 20,000 in this cycle. It's, so it would be off the charts. This is the moon scenario where Bitcoin goes up to $1 million, $2 million, $3 million. I mean, where it just swallows the whole market. I think that's like 0%, but I've been wrong. I'll be wrong again. But I don't think we're there yet. I think Bitcoin has a lot of long-term upside. We're not there yet. This is the possibility where I want to be investing in Bitcoin when we do come here, but I don't think we're going to be here for another 5 years. Because again, in the long-term trend, going all the way back from 2009, this is where I think we're at in Bitcoin. I think we're heading up in the final wave 5, which means we're going to have a long bear market, a bear market that was longer than every other bear market that we've had in Bitcoin, definitely longer, and could be the most, from a percentage standpoint, decrease. Now that's a really big claim for someone that is still looking at Bitcoin as a very good long-term investment opportunity. Now again, it's way too early to say. We don't even know where we topped out. So I'm not going to be talking about this whole bear market. We just want to be, as investors and traders, not finding ourselves in this bear market, holding the bag and taking massive losses because you got emotionally invested in your asset. Again, if I thought that Bitcoin was going to the moon and that was grounded in fundamentals or technicals, then I would be all over it. But again, my fundamentals I think are pretty strong, and my technical outlook I think is pretty strong too. And this is just my opinion. I'm sharing my opinion with you, so this can help you kind of form your own opinion and look at different perspectives. I'm, my perspective may be right, maybe wrong. We'll see. And I'm just trying to do my best and share what I know and what I think is important to people that are probably still watching at this point. So anyways, this is like a deep dive into Bitcoin, but this is going to be the video that everyone can come back to for the next 6 months as we chart this crazy market. So let's see where I want to get to next. So this is the count. So why did I change my count? So here, this was the chart. This is the part that I got wrong in the chart. So what I did was I tried to zoom in and figure out, okay, what makes sense? Where might I have been wrong? And does this make sense that this would be a better count? And I actually found out when I really zoomed into this, it actually does. So I'm going to do this. What I'm going to do is I'm going to zoom into just this wave one. Now it's going to look different because I'm going to zoom in and I'm going to put it, I'm not really going to zoom in. I'm going to change the scale. So the scale is going to go super off. It's going to look wild. But what I'm going to be doing is I'm going to be counting the 5 waves from the beginning. And this, I'm going to put this right here. This is the 5 waves that I think is now part of the larger wave one. So these are the 5 waves I'm going to be counting. And here they are. So we're going to switch this to a linear scale. And now it looks crazy, right? It looks like nothing happened. This is why I don't use the linear scale to understand Bitcoin, because you can't. It's a flat line. So now this is where it's going to get wild. Here we go. Here's the linear chart. So that huge move that we saw, that first wave that I was calling the first major wave for Bitcoin, it went from basically nothing all the way up to $32. Now this looks massive when you zoom on this scale, but look what happened after. Look at this massive move up, and I'm not going to try to chase it. I'm going to zoom it down, and there we have the next wave. So we have this massive wave, which now looks tiny, and then we have this other massive wave. This went from $2 up to $268. Yeah, $268. So that's like over 130%. I mean, sorry, 13,000%. I've been doing a lot of analysis, so I can't do math right now. Quick math in my head. That's 13,000, right? Well, I don't know if I'm on the right part. Yeah, that's right. 270. That's almost 10,000% increase. So that's crazy. So anyways, that's wild. So this is another very significant wave, and I think I was discounting that in my previous analysis. And then if we look at this, then it went from the bottom here. This was a complex correction. Went from $53 again up to this wild $1,177. And look at this wave. I mean, in comparison, here's the wave 3, and then we have to just keep zooming it out and look at that. There's finally the top right around here. And look at this now. Look at our previous wave 1. It looks like nothing. It looks flat. And this is only the first wave of Bitcoin. This is back in 2013. So if we keep going, obviously it's just ridiculous. So that looks like it makes sense. If you kind of can conceptualize this on the linear chart, we have this massive wave 1 that then pales in comparison to this massive wave 3, and then pales in comparison to this humongous wave 5. And this wave 5, again, these wave 5s are really big on Bitcoin. Now, what I'm going to do is share how the internal wave count also is 5 waves. So now again, I know not everyone may care to understand the whole thing, but I really want to preface this with the fact that this is not all simple, and there are always different possibilities at hand. And you have to be ready to adjust your analysis given new information. So if we take this, here we have the third wave. I'm going to be counting this third wave a part of the first wave, and look at the count. It's super clean. 1, 2, 3, 4. And again, the fifth wave is the one that just goes ballistic all the way to the top here. So before, if I counted this, now this is back on a logarithmic scale, making this looks simple now. This is back to my previous count. Whoops, no, my previous count was right here. So if I counted this as, well, I'm gonna show why this makes no sense, or not makes no sense, but I'm being hard on myself. If you count it from here to the bottom, and you understand when you zoomed in, seeing these 5 waves here, that's 5 waves. I'm gonna count it out just so it's really clear. Here's these mini 5 waves, a part of the third wave of 1. There are the 5 waves. Then we have wave 4 and wave 5. That would be 7 waves. If you count all these, 1, 2, 3, 4, 5, 6, 7. this can't all be one wave. That's not, that violates the Elliott wave principle because it's 5 waves up, not 7 waves up. And so I overlooked that. Again, you know, if it didn't end up panning out, this is not an exact science, but it does make sense and it matches the wave count very, very well. And it's making sense right now. So that really looks clean. 4, 5. So there's that 5 waves. 1, 2, 3, 4, 5. And the rest of the count is very self-explanatory. Wave 2, wave 3, wave 4. Now, where it gets fun, where are we heading to now? Now, again, don't ignore this. What I'm going to be looking at right now, just trying to make sense of, we're now in a 5th wave, most likely. This is my preferred count now, which means here's the bottom of wave 4. How is this 5th wave going to look? Well, it's going to be consisting of 5 waves. Here we go. We're going to start here. Wave 1. This is wave 1. There, it looks pretty clean. Really ugly wave 2. And now we're going up into wave 3. The thing is, we don't know when wave 3 will top out. We don't know if it's really close. Again, I could break this down, but I don't want to start breaking it down on the month, on the daily and the 4 hour. And, you know, that's where it starts getting dizzying. And I'm not, even for me, because looking at Bitcoin, trying to look more at the short-term picture can be really, really difficult, especially when moves are happening so quick and so large and it just keeps stretching out and stretching out. I like to just simplify it and look at the bigger picture. Here we are, we're going up into wave 3. We don't know how high this wave 3 is going to go, but we know wave 3s are very strong. So I'm have no bias. This is why, sneak peek, as with my trading approach, I'm still not buying any Bitcoin or buying in as a trade. I've just shifted my wave count. Now I need to look for a good entry. So right now we're in what's called, in my opinion, looking at it from a swing trader standpoint, we're in no man's land. We're in the middle of a wave 3, but we don't know exactly where we are. Again, I have a general vibe, but again, it can change as things happen. And again, I don't want to zoom in like that. We're looking at the monthly chart. That's what we're focusing on. Here's this wave 3. So we're spiking up. How high does this go? Who knows? But I'm going to share, there's one support level where I would buy Bitcoin. Again, I buy at support. I'm not going to chase the market just because I think the price is going to be, you know, higher in the next 6 months. I like to always focus, regardless of the count. I like to focus on buying at support and buying at a level that I think is significant. So then I can start the trade with a clear mind, with a, you know, you don't want to be feeling and trading, but you know, you want to buy at support. You don't want to just say, oh, I'm wrong, and buy in randomly. That can also make you do things that you probably shouldn't do, or make you make a decision too rashly. Rashly, I think that's a word. So anyways, so here's this 3rd wave. We're going up in this 3rd wave. I'm not going to chart anywhere. I'm just going to go ahead and chart it right here. That's at around 79,000. I don't know if it's going to get that high. We'll see. And then we go down to wave 4. Interesting thing about Elliott wave is that wave 4s are oftentimes, they alternate between wave 2. So in complexity. So if wave 2 is really complex, wave 4 is probably going to be simple. Wave 4s are usually complex, but look at what we had here. We had a very complex wave 2. This is clearly a correction. Didn't go below this, which obviously it can if it's a wave 2, wave 1. Wave 2 can't go below wave 1. And so this gives us a hint as far as what to expect in the scenario that this is 5 waves up, which I think is the cleanest count. Where the 4th wave is probably going to be very quick and very severe. This is the big dip that's going to come in Bitcoin. I don't know when. I don't know where exactly we are in this 3rd wave, so I don't know where that's going to happen. So I'm going to share now that you kind of understand the general, my general outlook on Bitcoin, I'm going to get into price targets. And ignore this because the timing, again, this is not to scale. Like I don't think we're going to last, this bull market is going to last past November. I would be pretty shocked. But again, as we get more information, then we can start seeing, okay, If we go down to a wave 4 and then we're starting to creep up in wave 5, then we can get a better sense of, okay, how long is this now likely going to go? As we get closer to the end of 5 waves, obviously we know that we're expecting a shorter, time until the larger wave ends. Now, something I want to mention, looking at this wave 1 took 6 months, this wave 2 took 9 months. Now, again, waves are proportionate to one another. They, there's some proportionality. It's not like you're going to have a wave 2 that lasts, 9 months, and then you have a wave 4 that lasts a month. No. Maybe, again, in some wave counts, the low of the wave 4 could happen in a month, but it could, continue this correction where, again, the wave 4 technically doesn't fundamentally end until we start going up in that wave 5. So I hope that kind of made sense. But I don't think we're going to have as long of a wave 4 as we did at wave 2. I think it's going to be simpler since wave 2 was complex. And I also think that it's not going to be as long. So maybe it's 3 months compared to 9 months. I don't know. That's a complete guess. I'm just trying to kind of have a general framework of expectations. And so I'm kind of thinking ahead, because you have to be doing that with trading. You have to know where you're wrong. You have to know, you have to be thinking ahead. So now I'm going to be talking about two more things. Important: stop loss. Clearly, this trade with Bitcoin is going to be very risky, which means you don't want to put a lot of money in it, and you have to be fairly confident that you're going to win a high percentage of the time. So I'm going to kind of, let me go ahead and get into that. I can kind of skip around. It doesn't have to be perfectly structured. So these trend lines are pretty significant. And I'm going to be looking at them. This trend line goes all the way back from the first wave of the first wave, and it really traces this bear market that we had here really nicely. Now, again, you might just say, well, okay, you're just connecting 2 dots. But now look what happened over here. If we start zooming in, I'm gonna, let me just take this out for a second. If we take a look at this line and see where it goes. Now, if anyone's remembered Bitcoin back here, this was a massive 50% crash that completed this big correction from 2017. So this went from around $6,000 all the way down to $3,100. And look where it snapped. It snapped at this very critical line. Now watch this. This is crazy. Look at how price reacts. It went from support to resistance because we broke down above it. Now this line would act like a ceiling to the price. So now we start coming back up, and look at that where it topped out. It crossed it, wasn't able to close above it, and failed. Then it tried again, came right up at it, failed again, and then we started another big correction. So this is a significant line. You could take the standpoint where you're like, okay, I think Bitcoin's going to go up in 5 waves, but if you're really trying to trade this, and let's say you're in a wave 3 and you don't know where it's going to end, but now we get up to this line, well, that would be a pretty good guess to at least take some profits or something. I mean, that's a very important line. It's reacted every single time, and that goes all the way back to 2010. So that's a really significant line. And the other line I'm looking at this is really typical with Elliott Wave. You always want to, I don't know what I did there. Let me just throw this back on. So again, we're all on the same page. Oops, I keep doing it the wrong way. Wave 2, wave 3, and then wave 4, and then wave 5. Okay, so this other line goes from the top of wave 1 to the top of wave 3. Now that's a really significant line. And actually, I didn't even think about doing this until now. And so let's see. What I'm actually going to do is going to go crazy if I put it on if I clone it and then I bring it down because of the log scale. So what we're going to do is I'm going to take this line out. It's a pretty simple line, so I'm going to remember it. And we're going to do we're going to do a parallel channel. This is completely, I wasn't actually even thinking about this. We do a parallel channel from this wave 1 to wave 3. We know that's a really important line, but let's see if we get anything else. We might not. I have no idea. Oh no, that's not working. Okay, I'm gonna look at this and see if we can, if I can find a way to try to, can we, sometimes I really dislike working with log scales. Okay, so can we bring this down? This is gonna go crazy, isn't it? Yep. All right, so I'm gonna try to figure that out, see if we can make some parallel lines with this very important wave to wave high, and see if that can interact anywhere else. Because again, I think if I draw the line and I try to move it down, it's gonna do the same thing that it just did, isn't it? Let's see. Yep. So I need to kind of figure that out. So anyways, that's a really important line. Let me go ahead and bring that back. Well, let me just go ahead and draw it back in. So that's another really cool important price target. Looking at this wave 1 to wave 3, where could that go? So I'm going to be looking at that right here. And again, this is a lofty price target, but let's say it's spiked up there today, 170,000. Let's say 6 months from now. 1, 2, 3, 4, 5, 6. I think that's right. July, that looks good. 245,000. Now, again, when we're getting into this point, it's clear bubble time. When we're above, I mean, even once we get to 140,000, you know, let's say 6 months out from this line. 1, 2, 3. Well, let's just go to July and then go up right here. 128, 130,000. That could be a very good price target for Bitcoin too. So what we're going to have to do is wait and see. The way I see it is that I want to buy at support when there's a good opportunity. And what I'm going to be expecting is a wave 3 and then a wave 4. My risk is that this ends up being some other pattern. You know, that could actually strengthen. Well, I'm going to have to do a lot of soul searching to try to figure out a count at this point, because if it's not that kind of ABC correction, I think I would be harping too much on alternate counts. You just have to know when you're wrong. That's the most important part. After that, take a break and then maybe be like, okay, what is happening? Because this would be really shocking to me if we do break this before we have this kind of bubble, because we've already started that momentum. And I think, personally, I think the fundamental reason why Bitcoin's going to be going up like crazy is because I think the fear of inflation is going to absolutely go mad. And I think that's going to seem like a fundamental, massive pro for Bitcoin. I think it would be. I think we had massive inflation, Bitcoin would be one of the major assets I'd be looking at. You know, Bitcoin, gold, silver, you know, real estate, I guess some stocks that have high potential, you know, I'd be looking to invest my money too. But I wanted to, I've challenged my inflationary outlook, and I was kind of in the inflation camp about, you know, 10 months ago. And then I started really diving deep into it because there's certain things that didn't make any sense to me. And the more I dove into it, I have a very strong deflationary outlook, and that's not good for asset prices in the long run. I'm kind of ranting here, but it's important. So again, that macro big picture, that's really important to have in the back of your mind too. Even if you're a day trader, I mean, this is going to impact you in other ways. And if you're not an investor or trader at all, this is going to impact everyone in very profound ways in the real world. This isn't just going to be some kind of market phenomenon that other people don't feel the effects of. So anyways, now let's get to, okay, why am I not buying Bitcoin right now? Why am I not jumping in? Again, lack of support. There's no rational reason other than, well, you can. That's a perfectly fine approach. You could say, okay, I'm going to set up this trade for Bitcoin. I'm going to be looking at some of these key levels, which I'm going to talk about now. I'm going to talk about the other Fibonacci retracements, where this could go. Here we go. Oh, these are good. These are good. So I'm going to go ahead and draw these other lines that I have on the other chart, because these fib retracements are already in. And what I'm going to do, this is the same. This is Bitcoin as well. This is just on the Bitstamp chart, so it doesn't show that the first wave of the first wave. Anyways, here is an important trend line. Let's find some confluence. Let's see where this where these lines may meet. So we have that one, and then we have the one. Let's see if does this work. Yes, it does. That's right around where it went. Yep. Okay, something like that. Cool. Okay. So now I'm going to talk about, before I get into the confluence, here is the 161 point. So I have two Fibonacci retracements. Oftentimes when you measure waves and you try to understand the relationship between, okay, what might the relationship, there are recurring retracements between waves. So they have relationships. And so maybe a wave 3 retracement to wave 5 is a 61.8% retracement oftentimes. And maybe it's only a 38.2% retracement. There's certain retracements where you can measure the relative magnitude of one wave and then say, okay, from the bottom of the next wave, where does that go? If it's has this relationship with this wave, where does that go? Now, again, it sounds crazy. But you know, a lot of people use fib retracements. I see it oftentimes being used kind of inappropriately, or they're retracing something that's not even the same wave, and it's, you know, it's kind of like, what? Or not retracing something that's the same wave, that would be pointless, but retracing something where a wave doesn't really have a relationship with another wave, like trying to find a retracement between wave 1 and wave 4. Like that doesn't make any sense because they're going in opposite directions. If that kind of makes sense, or, you know, some kinds of weird things like that. Anyways, let's get into the retracements. So there are two retracements I have here, very important. Again, all of these retracements are on the logarithmic scale. So they're not on a linear scale. Therefore, if you put it on a linear scale and you measure the relationships, you're going to be like, this is like 10 times larger. No, it's on a logarithmic scale. So, you know, I was kind of confused when I first saw that too. When I was trying to learn these tools, I'm like, well, this doesn't make any sense if I do it. And I had to also shift my tools to the logarithmic scale if I'm on the logarithmic chart. So so here we have the first retracement. Again, I'm going to be using all of these as potential targets, as potential resistance, support, all that kind of stuff. And the reason why I'm definitely not buying yet is because it looks like we're actually approaching very important resistance. Now, what I'm going to share is what I think is the best wave. I think this is the wave 1. If we're talking about this wave 3 that's eventually going to unfold, I think we only have completed the large degree wave 1. And this is a part of wave 3. This is like a 1-2 of 3, and then we're in the 3 of 3. I still haven't seen a lot of evidence of a wave 4. But anyways, that's kind of the idea. And then we're again going to have a larger wave 4. It gets a little complex again when you start zooming in, but let's focus on the big picture. What I did in order to find this retracement was I took this right here. I took this magnitude of a move, and I'm going to zoom in a little bit so we can see this. I took this move and I retraced it to the bottom of where I thought wave 3 started. And there's several ways that you can do this, but what I have is that 161.8% log retracement is, see, I want to make sure that I did that right before so this is either a 1, 2, 1, 2. We're starting this right here. We're looking at this as a wave 1, wave 2. See, the wave 2 is kind of ugly. So it's tough, but this is at least an approximate wave count. Again, we don't know the entire wave count. So the way that we end up saying whether this is wave 1 or this is wave 1, it can be kind of difficult. But again, it gives you a general trend. I know we're in in some part of wave 3. I don't know exactly where we are, but that's the general trend. Now, this retracement that I have, and let's just go on the weekly because I really want to make sure. I've already made this to be a very thorough video. I want to make sure that I'm getting this right for you guys. So my general count is that this is wave 1, this was wave 2, and this is now starting a part of wave 3. Now you can see these sub parts, but again, there's smaller and smaller waves, and it starts getting really complex when you start going even deeper than the weekly. So this is connected to this part. Okay, so this is not a major retracement. What I'm going to do here, where is it? Where is this actually connected? Because this just keeps going. Let's see, 9,000. Okay, good. This is actually, I had to stretch it out in order to kind of get it here so that you can see it. I did this analysis 2 nights ago, and I've done a lot since, so I kind of forgot about that. Okay, so this is sound. This is a sound approach. This is comparing this wave down and then this whole wave up, okay? So it's looking at the Fibonacci retracements. Fibonacci was a mathematician, and he found these, self-recurring kinds of patterns that occur in nature, and they also occur a lot of times in human behavior and human emotion, even though we don't really think about it. It's really interesting. So this 161.8% retracement is a key level. Wave 3 is oftentimes 161.8% of wave 1. Now, since we have to look at it on a logarithmic scale, I know that's not the case if you look at it on a linear scale. I think I'm probably repeating myself too many times. I just want to be really thorough for those that are learning or have not gone into Elliott wave deeply, because it takes a while to really figure it out. Anyways, so, and especially if you're using Elliott wave and you're going to try to follow my analysis and try to get out of the I'm not saying anyone would. I'm just saying, I think people really need to be careful. And if you're going to be taking massive risks in a complete market bubble, you got to make sure you've got a lot of a safety net. That's really important, because I'm talking to you traders out there, whoever you may be. So, okay. So this is the part of wave 3. This retracement is at 45,000. Well, we got to 42,000. So this is going to be resistance from a technical standpoint. Again, it's resistance that's not obvious, but these waves do have relationships that recur a lot. It's not perfect, but again, it's a cool tool, especially when you don't have a lot of reference to try to make sense of a wild market like Bitcoin. And then there's another retracement. This is a bigger retracement. It's even more important. Now, what this is taking this move. This is wave 1 of the final wave 5 that we're in, compared to wave 2. Again, I just want to make this really visual for my Elliott wave beginners, for those that are just wanting to try to learn and understand this. We've got wave 1, wave 2, wave 3. We don't know where that's going to top. Don't pay attention where I'm putting these waves. 2. So we're comparing wave 1, this magnitude, and then we're projecting it onto from the bottom of wave 2. So where would that project out to the future for a potential wave 3? And we have a really important retracement right here. Again, the 161.8% retracement. Since these are very similar waves, this wave 1 compared to this wave 1, they're well, the ratio, because look at what we're seeing. We're seeing 161.8% retracement at 43,000. So these are two 161.8% retracements on two different parts of this wave. This is a larger wave, so I would say 43,000 is a little bit more important, but this 45,000 level is pretty important too. And we're right around there. We topped it around 42,000. And yeah, 42,000. So we got within 1,000 of that, and 2,000 or 3,000 of this other 161.8% retracement. That's the most important resistance that I see until we get to up to, and again, this is going to be sliding up because these lines are sliding up. So every week, I'm on the weekly right now, every week it's going to be slightly sloping up. But that doesn't mean if the green line's your target, you don't want to be like, oh, I'm gonna wait right till we get to the green line. And you got to be quick with these markets because Bitcoin is super fast. You got to be ahead of the trend. This is going to be a tough wave to catch. So this is a master's level trade, a doctorate level trade. This is a super, but it's pretty clear. It happens really fast. It's going to happen really fast. And again, I haven't experienced it firsthand, but I'm mentally preparing myself because I might get into this if I get a good buying opportunity. And I don't want to chase the market. So that's just my opinion. That's how I'm approaching it. I'm just sharing with you my trading plan, if it's to any value to you, or if you're interested. So this is going to be kind of a trading journal for me, this video, to go through my analysis. So I'm doing this to make sure I'm staying sharp, and also making sure that I'm sharing everything that goes into this, because it's very deep. And I'm going into, something that I've done hundreds and hundreds of hours of research on, and not research, but chart analysis on. And I'm trying to curate it in here in about a under 2-hour video. Let's hope to do that. I'm almost done here. Let's get it. So wave 3. So those are the targets. not targets. These are important resistance lines, short term. I think we're going to eventually plow through these, obviously. 43,000, 45,000, and up here, this green line is going to be another important line. And this green line is going to be extremely important. And this could be, I mean, this line right here is the highest line that I see Bitcoin going to. Now, I guess it could, pierce it in this kind of like throw over, but I'm not going to be trying to chase Bitcoin that high. I'm going to try to get what I think is a high percentage trade, and not try to force it and try to get greedy and try to squeeze every cent that's going to come out, because when it goes down, it's going to go down quick. And it's going to be very hard to catch it. Then you might get your emotions in and like, oh, maybe it'll go up again, and it can get really tough. So you want to trade, you want to make sure you're letting your winners ride, but you don't hang on too tightly, because again, this is a trade. This is not an investment. So again, it's something I'm still trying to improve on and learn about, and kind of figure out what are the best strategies in all these different markets, and they all react differently. Bitcoin is not your average investment or your average trade. It's a whole other monster. So using leverage or anything like that, I don't think, hopefully there's no one that uses leverage in here. That would be wild. I can't imagine. But anyways, so important. So where would I be looking at a potential good buy? What I do, I look at my entries from a very price action standpoint, and it's really simple. Okay, I'm gonna just draw it over here so you kind of follow for people that aren't familiar with price action. It's the most popular, I would say, way of looking at technical analysis. It's just looking at how price reacts at certain levels. But I use it specifically and the most for my entries for a trade. So I focus on, let's say this is resistance. So we'll just do it in red, even though these should be red. But it's technically target, so green. Woo. So let's just do this in red. Okay, so here we have a market. We've established this line as resistance. Okay, so I'm going to go ahead and let's see. This is a deep video, but I hope it helps, and I'm wanting to make sure I don't miss anything and I don't leave anyone out, especially since I was very off before on this wave count, and I'm wanting to make sure I'm changing and evolving as things move very quickly. Where is this? Let's see here, path. Okay, so we have resistance. We obviously don't want to buy at resistance because price could get rejected and go back down. So that's not a good entry. What we want to do is buy at support. So we could come down, we could buy at support. Let's say the market's going down and we're in a trend where it's going down. We think the price is going up. What we want to do is we don't want to necessarily buy here. We want to kind of show that this is an important test. We want to see how price reacts at the point. And the best scenario is where you see this, and then price starts to come back and retest it. And then this is where you enter. That's kind of a standpoint that you could have. Now you put your stop loss before the red line or below the red line. So now if the price does end up crashing below, you don't want to enter here because you don't know if it's going to just smack through the first time. It's just going to go crashing below. So you want to see price react off the line and then come back and ideally retest it, enter, and then put a stop loss. If the market goes below this price, I'm going to get out because then this support will break. And it's kind of like you just think of a floor and it just breaks. And again, you have false breakouts and all that. But again, looking at those high percentage trades, these are these high percentage trades. Now, what if we're doing what Bitcoin's doing? Same thing, but from the opposite standpoint. Let's say we're in an uptrend and we face resistance. Well, we don't want to be buying here, but a way that we could be buying Bitcoin from resistance is, let's say we go above the fib retracement. Or let's say we go above, I don't know if I really want to be buying for the first time above the first green line. Definitely not. But anyways, let's say we break above price. We don't want to buy. We don't want to buy as the market breaks the resistance level. This is resistance because price is below the line. Now we break above it. We don't want to be buying here. We want to wait and see if this is going to hold. And what needs to hold? A healthy market should come back down and kind of acknowledge the previous resistance, which is now support. And then You want to buy over here and then hopefully see price bounce up. That's, oops. That's what you want to do. And then, so price breaks out, comes back down. Here's your entry, stop loss right below. And then, you know, if it breaks back below, stop loss triggered, comes up here. Awesome, you've got a great entry, very low risk. So that's the way I'm going to be looking at Bitcoin. Right now, we're in no man's land. What's happening right now? We broke above this level. And let me show you this level. You've probably seen it because I've been showing this chart for a while, but this is a parallel channel. And see, I need to figure out why I was able to do this channel, but I wasn't able to do the other channel. I'll figure it out. This is the channel right here. We have this line, the low of wave 1, and the low of wave 2. This is wave 1 and 2 of 5, the final wave 5. Bottom of wave 1, bottom of wave 2. Now what I did was I drew a line from a parallel channel from here, parallel line, and I drug it up, and I connected it with this previous pivot high. And if we take that above, this is resistance. Now, what I've seen, we did spike above, we spiked down, and then we've spiked above again. Now, this is not a retest. Let me show. Let's zoom in on a daily, and we can see this really clear on a daily. Let's see how price reacted when we got to that point. So what happened? Was this a good entry? Well, you know, on a daily, I guess you could say it is. Let's see. We went above again. I wasn't looking at Bitcoin, or I wasn't considering buying. I was still doing my analysis as it was just blowing up above, 35,000. So that's where I was trying to look at the other scenarios. I wasn't chasing price because I thought I was wrong. I was trying to figure out first, digest it a little bit, and then wait. The market's always going to be there. You don't want to chase the market because that leads to emotional decisions. And that's what is really, really bad with trading. Anyways, so we broke above, we broke down. That's a false breakout. This is a false breakout. We broke back down, and then we broke above again. And eventually we did come back down and retest it. You can see it real little on the daily chart right here. That's a really nice retest. Now, what I'd like to see, because I'm looking at the bigger picture, this is a really quick retest. I don't know how long that took, but anyways, when I'm looking at it, I want to at least see a nice move back down to retest that on the weekly chart. If I see Bitcoin come back down to, let's say, it would be between 35, 34, and 33,000, this would be the time to enter. And again, if you're like trading short term, you would be looking to have the stop loss below. The way I'm going to be approaching it, I'm just sharing this. This is my approach. Everyone's approach is fine, whether you trade this market at all, or if you want to trade it your way. But this is the way. There's no right way. That's the beautiful thing about it. There's no right way. You can do what works best for you, what works best for the trader you are. What was I getting at? Okay, so what I'd like to see is a better retest on a longer chart, go up. Now, let's say we do come back down, and then we don't just bounce back up beautifully, but we break down. We end up breaking below this channel. Would I sell? Well, I've already taken the risk that I'm willing at the worst scenario be completely wrong, that the bull market ends up kind of topping here or not tracing out 5 waves. This ends up somehow still being a wave A, B, C, and we end up going down. Now, again, that is my best alternate count, that we have a wave, that my previous count that I've just went void. It's not completely void, but it's I would say it's basically in the trash, because if we're looking at this is a wave 1, 2 of 3. Here's a little bit of a breakdown. This is why I'm like almost 100% sure my count previously is wrong. This is a wave 1, 2. Now here we have 3. A part of this 3, we still need another 4, 5 in proportion to this. We haven't had that yet. And that means after that, we're going to get another 5. And 5, that's where we start going way above. Now, the question is, when do we start that wave 4? That could bring down Bitcoin, an easy 10, 15%, possibly back down to this level. I have no idea, but I'm not trying to time it. I'm looking at my levels. What levels am I comfortable with buying? Understanding the risk that I'm taking on. This is the risk I'm taking on. That means, let's say, for example, Bitcoin went down to 34,000. And went down to 34,000. I bought whatever I was willing to lose, and tried to trade for the next, several months. And we end up just going in a massive move down. Where would I be 100% wrong? Right here. This is where we would be 100% wrong, or where I would be 100% wrong on my new count. Sometimes it happens. Sometimes you lose 2 trades in a row. It's tough, but you gotta be flexible. That's at 13,000. Let's see, just be real exact, $13,880. So if we violate this move, and we break below it, that would invalidate the pattern, where wave 4 right here can't overlap below wave 1. We can't see this. That's a no-no. Wave 1 does not do that. Now, again, it can do that in one pattern called the ending diagonal. I don't think we're going to see that kind of pattern. I think we're going to see a blow off top. I think an ending diagonal. And yeah, that's, again, super, super nuanced, and just, it's almost trying to always have another scenario. When you're confident about it, you got to go for it, and you've got to put, not you got to go for it, but you've got to be willing to take on the risk. And if you think that it's a high percentage play, like if you think, for me personally, I feel like I'm definitely going to be right on this 50% of the time. I feel like more, but I'm just going to be really, really, really careful and just say 50% of the time. So if I think I can make, 400% on my money 50% of the time, and the other time I lose 66%, well, I think yeah, that'd be about 66%. Let's just see, just to make it really clear. And again, the bigger the downside, the less you want to risk. But also the higher the percentage you think that you're going to be right, the more you can do it. And the law of large numbers eventually takes hold. So 58% decline. So, I would need to put this in a binomial calculator and really figure out, how many times, how often I'm going to be making money, but it's definitely positive. It's a good risk to well, it's a very, very big risk, big reward. That's kind of how it works. And unfortunately, the setup is not cleaner, to where, technically speaking, it could go all the way down to wave 1, and that until it's clear that the count is invalid. My dad just got home, and I was just saying hey to him. So anyways, back, this is just wrapping it up finally. So that I've really covered just about everything I wanted to cover. This is the amount that I'm willing to lose. Now, again, if I'm not able to get a good fill here, then that means I'm looking to buy. Let's say if we come back down and retest these fib retracements, that would be another more support, because again, we broke significantly above, come back down. I would be willing to buy at that level. And I want to be willing to buy a lot, again, because that's at a much higher price. And we got to also remember that this wave 4 is going to come, and this wave 4 is going to be a big move down. Everyone's been talking about how, Bitcoin's been less volatile to the downside so far in this rally up. Oh, well, we're going to have one eventually. But the thing is, we could go a lot higher before we go start that wave 4. So theoretically, we could go up to 100,000 before we start the wave 4. I think that's a little high. From my standpoint, I don't think we're going to break above this green line in wave 3. So that's really my max target for wave 3. And it'd also be interesting, real quick, since I've already made this video so long, I'm going to go ahead and put the 200% retracements on here as well. They're not, I favor the 161.8 and the 261.8. And that's another one that I'm going to be looking at, 261.8. I didn't even look at that. I guess I can put out a super, super general price target on Bitcoin. Again, this is a trading opportunity where I think my best guess right now, again, there's going to be a lot more information getting. We don't know where the top of wave 3 is, but if I had to guess on a price target on Bitcoin, my price target would probably be, first of all, from a time standpoint, I don't think we're going to go past November. So, and now this wave 5, this is the absolute highest. I don't see us in any scenario breaking above this green line, and that would even surprise me if we get that high. That is absolutely massive. But again, if there's enough of an emotional pull that brings people into Bitcoin because they are, you know, again, deflation is a really nuanced topic. So I get it. It takes a long time to really understand it. And there's so many dynamics at play. It's a really, really complex conversation. I'd probably have to make 5 videos of this length to really explain all of the picture, all the things around it. So I try to go as briefly as I can and pick some of the big points that I think are really important. So, anyways, if the inflation concern becomes so hysterical, where we have just an absolute, like, another massive move like we had in wave 3 and wave 1, this kind of just rip your face off rally where it's just like it's just going to the moon, it won't stop, it just, runaway freight train, because everyone's piling into Bitcoin because they're so concerned about inflation, until a bubble pops. And then, well, that's I think we're going to have a 1929 kind of stock market bubble. And we're already in a bubble. Oh, don't get me wrong. I'm being very, very careful with my risk management, because I understand how brittle, how fragile all these markets are. It's all based off human emotion at this point. No fundamentals at all. Fundamentals are completely out the door. A lot of people don't even understand what the fundamentals are. That's a debate. It's not even like asset prices are in a bubble. I don't think that's necessarily a consensus take. I think a lot of people think that the dollar isn't a bubble, and therefore it's going to crash everything. Anyways, I'm going to be getting into a lot more. I mean, really some cool topics. I'm going to try to break it down and really just have fun with it, and just break down one puzzle piece at a time and try to do as many of these as I can. I'm going to be going into school, so it's going to be tough. Just kind of ranting at this point. But anyways, my target on Bitcoin, I'm so sorry. I'm taking so much time with this. We're gonna break it down here. Okay. Definitely not going above this level. So my technical, and here we go. Here we have the 261.8% retracements. So these are really important levels too. We can start doing retracements with wave 3. I'm gonna be doing a lot of the updates on Instagram. I'm not going to be trying to do all of these massive updates on Bitcoin, super technical on my YouTube channel. This is really more as a deep dive. If anyone's really interested in Bitcoin, and in obviously the first 5-10 minutes, if anyone, is kind of guessing like, oh, should I do this? Should I go out of my comfort zone? Probably not. But again, I don't think anyone that is in that camp is still watching. This is a super deep dive and totally not needed for people that aren't. This information is not pertinent. The other information, the macro, that's what I'm going to be covering on my YouTube channel, mostly, not this kind of stuff, because this is super in depth. I'm going to be doing that on my Instagram channel, so definitely go ahead and follow that one if you're wanting to see my updates as I see really significant updates on the markets. Again, I'm wrong a lot on the short term, but my big picture, I'm starting to really get some clarity. And it's just a question: how long does this bubble pop? It's really hard to time bubbles. But the nice thing is, when we take a look on the logarithmic chart, Bitcoin is looking very, very clear of where it's going in the next, I would say, 6 months, and the stock market is starting to show that clarity. Again, you can check out that Instagram if you want to kind of see where we are in the stock market. Those captions are also helpful to kind of explain the charts. So where is this price going? Again, it's a best guess. I think a very conservative approach given the count. Like, I think at least, and I might change my mind as if we get more information, but I would say a really conservative target for wave 5 for the whole thing for the next 6 months or so, whatever. We got this 200% retracement, but we need that wave 4 to happen too. We can't go much past here. So again, I like this 160,000 between, like that 123,000. That's a good level too. That's a really good level. We've got the 261.8% retracement of wave 1 to wave 3. And we also have the trend line support, this green line right here. So that's a really important intersection. I'm gonna keep an eye on that. Again, throw that in my long-term view, because not long-term view, but we're not even looking at wave 5 yet. We haven't even finished wave 3. And this is going to take months to develop, most likely. So yeah, that's what I'm looking at. That could be a really good level. 123,000. I think that's a very, very conservative, very, very realistic, easy. But if this turns into the ultra bubble and it's just craziness, and it just, the inflation scare really becomes delirium, and you see just parabolic move after parabolic move, we could come up to this second green trend line. Breaking above 200,000 could, I guess. This is the max. This is the absolute. If you're still holding right now, you have a lot of guts. If you're trading it. Now, again, there are going to be a lot of people holding it like it's going to go to the moon, it's always going to stay there. No, I don't think so. So yeah, wherever this level ends up tracing, if we take it right here, September, whatever, and it's going close to 300,000, 250,000. These levels. This is a very important trend line from a long-term standpoint. Looking on the 10-year chart, I don't see it going above there, and I would be very, very concerned to even try to hold it all the way up there. That's terrifying, because it's going to change. It could be changing 10,000 at units of $10,000 like in minutes. I mean, we're talking. Bitcoin moves like a crazy amount, and obviously at that point everyone would be focused on Bitcoin, so price would be going like crazy as people start selling again. The smart money starts dumping as retail, and everyone's jumping in on the bandwagon just like they did in 2017. Some things never change. Some things never change. So anyways, 192,000, again, that's another significant factor, and that's kind of the middle of these trend lines, and this range I see. I don't think we're ending in May. I think that's a little early. But again, I'm going to be looking at that's a year after the halving. That's why I have these two things. This is a year after the halving. This is a year and a half after the halving. I probably should have explained that. But that's why I have this kind of time frame. I think this is going to be a shorter cycle. And it's going to be a more violent cycle, but it's going to be. I think it's going to be quicker. And so, I think it's going to, the last cycle going all the way up in wave 3, that lasted all the way up to here, a year and a half after this ending, a year and a half after the previous halving. I don't think we're going to get here to November. And if we do, and the market's still going up, well, then that's a huge sell sign, because we're getting really, really late. We're getting really, really late. Because again, a big factor of it is the halving. People are buying because the anticipation that's going to happen again. And right now it looks like it's going to happen again. But it's going to have to top out when a lot of people are piling in. That's where you're going to, the boat's going to just sink the other way, because now everyone that was going to buy bought. No more buyers left, only sellers. Massive crash. So that is the count. That's my range. My range is very wide, because I don't have enough information yet to project that far. But I think 123,000, super likely. And above that, it could get wild. But I'm going to look at this I'm just going to kind of take that wide time frame with a grain of salt and not really focus on that. Right now I'm focused on, hey, I haven't even entered, and I don't know when I'm going to enter. My scenarios for entering, or if we back test some of these really important fib retracements at 45,000, if we just go straight up, then I'm not going to go in. I'm not going to chase the market. And I would be, at that point, if we get to close to this green line, I'm going to be waiting for that wave 4. And that wave 4 is going to be fast, violent, and that's going to tend to go towards the previous wave 4, wave 3, and again, that gets a little complicated. But I'm going to be looking for some of these targets to be back tested, and then in that case, I want to be riding some of wave 3, riding wave 4 down. I would only be riding that wave 5 up. And that could be at higher prices, but wave 4 might not come back down to 40,000. Who knows? But I think there's also a pretty decent chance that we could come back to 33,000. We're due for a correction. We're at important resistance. So that's where my focus is on right now, considering how much am I willing to risk, and making sure I've got that kind of trading plan ready. I'm just mentally preparing. This is my window, and we're just going to continue to check out this chart. This is my trading plan. Totally be very, very careful if you're even considering trying this. It's going to be a crazy market. And yeah, I hope this was helpful and that you guys learned, found some value in this. And yeah, that's about it. I really, really appreciate it. And for anyone that's actually watched this entire rant, that's crazy. But this is all the information that I have on Bitcoin from my alternate account that I've changed to. And I really wanted to be thorough and share why this wasn't just me reacting. Oh, price is going up, I'm wrong. I had a very strong outlook on this, and I looked at these levels very carefully, and I was wrong in the short term. I didn't lose any money from it because I wasn't in it because there's, first of all, I thought it was going to be going down, but I also wasn't convinced enough to be trying to short it or do something else. We're in very, very volatile times, so it's really good to be patient and wait for clear opportunities, whether you're a trader or investor. Unfortunately, for an investor, there's not a much many opportunities where everything's super high price, but patience and just making sure that you can do what's in your control, like I talked about in my deflationary how to survive deflation video. So anyways, thanks so much for watching. Really appreciate you all. If you have any questions, let me know. And yeah, I'm going to be doing updates on my Instagram channel. So if you're interested in Bitcoin and wanting to see maybe like a weekly update or so, whenever I see something important, I'll go ahead and post it. So yeah, thanks so much for watching, and I'll see you all next time.